to head over to Tom Keene and Ken Prewitt on Bloomberg Surveillance Radio. Listen in as they speak to PIMCO's CEO, Mohamed El-Erian.
In revenue and expenditure, we have two very different visions right now of how this should happen. So I would take it as good news, but I would not take it as something that is going to change the outlook significantly.
Okay, but it's sort of like the old story about the farmer hitting the mule over the head with a 2x4, right? It got his attention.
Right, and now you have to maintain the attention, right?
Yeah. How optimistic are you?
More optimistic than I was a few months ago, because we now have two competing visions on the table, and we have a basis to discuss this. But I'm realistic as to what it's going to take. And don't forget, we also have a whole discussion on the debt ceiling that's going to have to converge with this. So this is a complex issue. It's not going to be easy, but now at least we have the basis for a discussion.
Mohamed, when you look at the debate that we're having, and certainly it's unimaginable from the 1950s or the 1960s, when we look at the mathiness of it and all that, are we just deluding ourselves that all this is about character and tough decisions? Is there an overwhelming here that the behavioral is the most important issue?
That's a great question, Tom. It certainly is about leadership. It's about understanding that we have an obligations to future generations, and we just can't pile new debt on top of old debt. But there's something else, which is a recognition that this is part of a major realignment. You called it earlier, it was unthinkable that the U.S. AAA rating could be put on negative outlook. That's just one of the many unthinkable things that have happened in the context of this global realignment. So it is about domestic leadership, but it's also about a major realignment of the global economy.
Why aren't interest rates higher?
Because there's a number of things going on the interest rate front. First, yesterday, there was also a flight to quality. So gold benefited, but also fixed income benefited as equities sold off significantly. Second, the market is pricing in the growth impact of austerity. Fiscal austerity in the short term dampens growth, and therefore having that impact. And thirdly, the market is pricing in what policymakers are going to do. The more fiscal austerity you get, the more likely that the Fed will stay on hold for longer. Put all that together, and you got the interest rate reaction of yesterday.
Well, when that S&P story crossed the Bloomberg, we were on the air, and you could watch the Bloomberg screen and watch gold go up to a record.
No, we were not on the air. I had 4 hours off yesterday. I took the day off yesterday, Mohamed.
Finally, Tom.
Finally, yes.
Finally.
Tom was gold breaking, and I was on the air. Anyway, you can see gold run up to a record, and you can watch stock market futures take a big dive. And yet the bond market, most directly affected by that S&P announcement, didn't do anything.
Yeah, initially it sold off. So the initial reaction was that the credit risk had gone up. And then you got the second round effect, which was the flight to quality, which was the understanding of what the economic impact would be, and then what the policy impact would be. So you saw both effects. And we're going to see this tug of war going on for quite a long time. And that's what happens in a AAA market. You get this tug of war. And we've seen it in Europe, and we've seen it in other places.
David Goldman was so good on this distinction you make between AAA or higher quality markets and those lesser quality. If we don't need to see much of a move here to really create a crisis within a AAA mentality, what are you watching most closely? Is it interest rates? Is it the dollar? Is it, say, our spread to Brazil? What's the thing that Mohamed El-Erian's watching most closely?
It's everything, Tom, because there's so much in motion right now. So we spend a lot of time looking at what you mentioned. We also ask the question as to how's the rest of the world going to react. The one thing we don't know, Tom and Ken, and I certainly don't know it, is how does the system react when the AAA of AAA is downgraded? We don't know that, because most of the time there's someone to step into the core of the global system. That's what happened after the Second World War when the U.S. replaced Great Britain. Today, there's no one that's willing and able to step in. So this is a very complicated world right now, and we just have to be humble by what we don't know.
I want to bring Donald is in here. For those on radio, a camera guy, Donald, there's a 2-year yield, Mohamed, in Greece, which looks like a Saturn V launcher. Here's the crisis up in early 2010. ECB solved that. And there's a moonshot here, folks. Ken, 20.6% is a 2-year yield on Greece. Dr. El-Erian, would you be purchasing Greek paper to make a 41% 24-month return?
Not at this stage, and you've heard me say it over and over again. You don't solve a solvency problem with liquidity, and that's what Europe has been doing. Europe has been trying to address Greeks' debt overhang by providing more liquidity, and that just piles new debt on top of old debt, and it doesn't address the issue. The reason why you wouldn't buy it even at 20% is because a restructuring can have a significant haircut. So when we looked at the whole yield curve in Greece recently, we don't think as yet it offers value, even though the market is now pricing in a high probability of restructuring. You also have to recognize that the recovery value is such that our estimates right now is this is not yet the time to buy Greece. Stay on the sideline, as we have been, as you know, for the last year and a half.
All right, you've been listening to Tom Keene and Ken Prewitt on Bloomberg Surveillance Radio, speaking to PIMCO's CEO, Mohamed El-Erian, so listening in on their conversation.